Hello everybody, welcome to Pravega Civil Service Academy, topic-wise analysis of current affairs. Actually, I've taken a different subject this time around also. The topic is NPAs in the banking system of India. NPA means non-performing assets of the banking sector in India. Okay, so let's start the program. What is an NPA? See, as per the RBI norms, when an asset ceases to generate income or interest to the bank, that can be termed as an NPA. Okay, that is called, in very simple sense, if a borrower could not repay his amount or installment in the prescribed time frame, that can be termed as NPA. Okay, that is what RBI says. Okay, now let us see the different segments in NPA. For example, as far as a term loan is concerned, for example, housing loan. Housing loan is a term loan. Education loan is a term loan. Car loan is a term loan. So how these term loan become NPA? When a person who borrows money from the bank does not repay the amount in 90 days, then that account will be treated as a non-performing asset. Okay, the 90 days concept is only applicable for term loan accounts. Okay, that is the first classification. Coming to the agriculture sector has basically two important subparts. One is the short-term crop and the second one is the long-term crop. For example, paddy is a short-term crop. Paddy, jowar, etc. is a short-term crop. If a borrower could not make his repayment in the two consecutive crop seasons, then that account will be termed as NPA under the short-term category. Okay, that is a short-term category. While it comes to the long-term category, if the borrower could not make the installment for one particular time, that is maybe for 1 year, then that account will be treated as NPA under the long-term finance of agriculture. So these are all things as far as agriculture is concerned. Coming to the business angle, it has got lots of other technical issues. For example, if it is a cash credit account, that means a working capital account for doing business, for day-to-day meeting the day-to-day requirements of the business. That account may be turned to NPA if the business turn weak, if it is not proper routing in the account, if the stock statements are not properly given, etc. So that is for SME or for the business purpose loans. So these are all the segments in NPA is concerned, as far as NPA is concerned. Then we can look at the classification of NPA. NPA is broadly classified into three basic categories. One is a substandard account, second is doubtful account, third is loss account. Okay, these are the three categorization of NPA. Let's understand what is a standard account. Standard account is it's nothing but a performing account. It's a live account. If you are repaying the amount in time, that is called standard account. Secondly, if coming to the three categories of NPA. Okay, earlier I said about the standard account, which is actually not an NPA, it is only a standard account. Coming to the NPA side, that is a classification of NPA, we can say the first one is substandard account. If, as I've told earlier, if an account does not generate an income for a specific period of time, say for example 90 days, that is for term loan, 90 days, then that account will be called as NPA, non-performing asset. If that account ceases to generate any income for the bank for 12 consecutive months, then that account is termed as substandard account. If that account which does not give any interest or generate any income to the bank for 12 months, that is called as substandard account. Second categorization is doubtful account. If that account does not generate any income for the next 12 months, that can be termed as doubtful account. After the first 12 months is substandard. After the 13th month to the 24th month, that is called the doubtful. Okay, the doubtful will continue up to 3 years. Okay, the doubtful will continue up to 3 years. And in the third after the 3 year, it will be termed as loss asset. Loss asset means the complete write-off will happen. For this to happen, the bank has to make adequate provisioning also. Okay. For example, if it is a secured loan in doubtful category, you have to make 25% of the total outstanding as provision. Okay. So these are all too much technical. I don't want to go further into that. So these are all the categories of class, or rather we can say the classification of NPA. Okay. Now let us understand as far as these are all the background of what is an NPA. If you don't know what is an NPA, this is what NPA is all about. Okay. So now let us see the implication of NPAs in the banking system. Okay. The first important point is the lack of capital availability in the country. This will result in lesser GDP because economic activity will be lesser, investments will be lesser, so automatically the capital availability will also be lesser. That will reflect in the GDP figures as well. So that is the first important point. The economic growth will be lesser. Okay, that is the first important point. Second aspect is with respect to the credit growth of the country. If credit growth does not happen, it will affect, as I mentioned, it will affect the GDP growth rate. In a more direct manner, it will affect the banks itself. Okay, banks generate their income from lending activities. For example, if you take a housing loan from a bank, they will generate income out of it in the form of interest rates, okay, interest income. So that will not be possible for the banks. Okay, so that will create a kind of mess in the banking system. Third important point is that if a continued level of NPA, higher level of NPA for a continuous period, for a higher level of period will result in the banks itself being in a position of a bad shape. Okay, that will even lead to the collapse of the bank. Okay, the fourth important point is with respect to the government. Government via banks is implementing so many schemes. For example, Prime Minister's Jan Dhan Yojana, or else the Mudra Yojana, or else the Prime Minister's Suraksha Bima Yojana, etc. So much of schemes are routed via banks only, especially with respect to the public sector banks. So what happens is that if public sector banks collapses, automatically these schemes will also be in a jeopardy. Okay, that is a fourth important aspect. Coming to the consumer side, they have to give higher rate of interest. Why? Because to increase the profitability of the banks will start increasing their interest rates. You can see right now in the present context, the RBI in its bi-monthly policy has also increased the key policy rates, that is the repo and the reverse repo rates. So automatically banks will increase their interest rates on the borrowed funds. So what happens is that consumers has to give more funds in the form of interest rates to the bank. The bank will also charge additional service charges, minimum balance charges, etc. to keep their profitability and to keep to make the banking system more sustainable. So that is other implication of NPAs in the banking sector. So now let's see the most critical part of this particular topic, that is the present situation of NPAs in the banking system. Okay. See, I'm just putting some statistics in front of you. That is, as per the RBI data, the total gross NPA ratio of all the banks in India is around 11.2% in March 2018. That is around 10.3 trillion. Compared with that of the last financial year, that is the 2017 financial year, there is a whooping jump has been taken place. For instance, the gross NPA level of banks in March 2017 was 9.3%, while in the absolute terms it is around 8 trillion. There is a quantum jump has taken place. It's a matter of great worry. If you look at the total write-off, the written-off part of NPAs this time around in banks is roughly around 1.44 lakh crore rupees. Okay. And out of the 1.44 lakh crore rupees, the public sector banks share is of is of very great in nature. For instance, it's roughly around 1.22 lakh crore. The public sector banks has written off around 1.22 lakh crore of loans in the last financial year, that is on the 2018 financial year. There is a jump of around 64% from that of the 2017 level. It's a matter of grave concern. For example, the second largest public sector bank of India, that is the Punjab National Bank, has posted an annual loss of around 13,000 crore rupees. State Bank of India, the largest public sector bank, the largest commercial bank in our country, has posted a loss of around 6,500 crores. So this shows some kind of worrying tendencies in the banking system, which needs an urgent correction at the earliest. Okay. So let us see what are the major reasons for the burgeoning level of NPAs in the banking system of India. The first and the foremost reason which I would like to say is with respect to the GDP growth rate, which has happened during the time frame of during 2000 to 2008 period, which is considered to be one of the which is considered to be one of the golden period of the economic growth is concerned. We have got an annual growth rate of around 8.3% starting from 2000 to 2008 period, because that was considered to be one of the boom periods of the country. So what happened is that automatically banks started lending in a reckless manner, especially to the critical sectors like infrastructure, aviation, steel, iron and mining and iron, etc., power, etc. So what happened is during the boom period they started lending. When after the 2008, when the financial crisis, that is a global financial crisis, the subprime crisis came into existence, automatically the economic growth started to recede, started to come down. So what happened is that corporates started their default. Okay, corporate could not repay the amount they have borrowed. The inflation was hovering around double digits. The current account deficit was also on a very high scale. Rupee has depreciated. So combined with all these factors, what happened is that over-leveraged corporate sector, because corporates were borrowing from banks in a reckless manner. Even the banks were also ready to provide advances to the corporate sector. So automatically after 2008, due to so much of issues, like the governance issues also, for example, the scams has taken place, the 2G spectrum scam, the Colgate scam, the Commonwealth Gate scam has taken place. Another major issue is with respect to the policy paralysis, which started from 2011 to 2014, where government were unwilling to take the major policy issues. Okay, so these contributed a major chunk for the increase of NPA in the banking sector. Okay, that is the first and foremost thing. There are the other important reasons which I have already highlighted in the PPT. Just go through that. I'm just highlighting the important points. Okay, the second important aspect is with respect to the legal system. You know what? See, there are around 10 lakh crore worth of accounts are lying with the Debt Recovery Tribunal. DRT is basically a tribunal to expedite the NPA issues in the banks. The amount is 10 lakh crore. It is now pending with DRTs. So banks could not move with these accounts because it is a sub judice matter. So when it lies in the DRT, it takes around 2 to 3 years to complete the process. So 10 lakh crore is redundant there. So that is other issue as well the legal system is concerned. Another important issue is with respect to the governance of the public sector banks itself. The political meddling in the governance of public sector banks. For example, we can see the Bhushan Steel issue where the syndicate bank chairman has been arrested. And there are other issues like I've already mentioned the environmental issues, land acquisition issues, etc. I've just highlighted in the PPT. As I've mentioned earlier, the interest rates is increasing. So automatically what happened is that the corporates which are actually borrowed from these banks could not meet their obligations because already they are stressed and now the interest rates are going up. so they could not make the repayments correctly. So these are all the factors responsible, or the reasons responsible for higher NPAs in India. The twin balance sheet syndrome, which was actually pointed out in the economic survey 2016-17, aptly says what happened in the Indian economy with respect to NPA is concerned. Okay, so that is what I would like to say about the reasons. Okay, I hope you understood some of the major. I'm just going through the peripherals of NPA, so that you can, if a question comes in mains 2018 or in any other for next year or something like that, you can able to say these are all the things. For GS paper, it is more than sufficient. Okay, so coming to the third, to the next aspect is the things, or even the things which the government or the RBI has taken to curb the NPA menace of our country. The first thing I would like to say is with respect to the prompt corrective action, that is PCA make a framework. Okay, 11 out of 21 public sector banks has come under the RBI purview of PCA, prompt corrective action. What is this PCA all about? PCA is nothing but RBI is controlling these 11 banks. I mean, they are closely monitoring the functioning of these banks, especially the 11 banks. That is actually, those banks are of public sector banks only. Okay, so under the PCA, I have mentioned in the PPT, the RBI will impose certain limitations. For example, fresh advances over a certain limit could not be made. Branch expansion could not be made. Dividend payout could not be made. So these are the things under PCA. Okay, PCA was actually started by our former Reserve Bank of India Governor Sri Raghuram Rajan in 2017. Okay, this is what I would like to say about the PCA mechanism. So under PCA, what RBI intends to do is to turn around these banks and to make them profitable. Okay, that is the first important step. Second important step is with respect to the restructuring of accounts. What is restructuring of accounts? See, restructuring of account is nothing but if the creditor feels there is possibility for a turnaround for a company. For example, XYZ company. XYZ company has borrowed around 2,000 crore or 100 or 1,000 crore rupees. There is a possibility that the export now the economic scenario in the country is changing. So the creditors are feeling okay, fine. Anyway, the scenario is changing. The company has changed, some kind of a management change has taken place, or fresh equity has come into the company. So automatically what banks will do is that they will simply restructure the account. The restructuring means they will postpone, or they will give extra money, they will give extra time to the company so as to make it profitable or sustainable. Okay, the mechanisms like corporate debt restructuring, the SDS strategic debt restructuring, the S4S scheme, etc. are examples of restructuring of accounts. Okay, that is the second important aspect. The third important aspect is with respect to the IBC, Indian Bankruptcy Code. I hope you all understand about this particular word. This is a buzzword right now, the Indian Bankruptcy Code. Okay, under the Indian Bankruptcy Code, the companies will find a resolution, or the creditors or debtors or whoever it may be, the stakeholders can find a resolution in a span of around 180 days. I'm sorry. For this, an insolvency professional will be appointed by the NCLT, that is the National Company Law Tribunal, and he has to make a recommendation within a span of 180 days. If he could not make a resolution with the span of this particular time frame, additional time of 90 days will be provided. So the resolution of a company has to be made within a span of 270 days. For example, we can take the case of Bhushan Steels. Okay, Bhushan Steel has been taken over by Tata Steel for around 36,000 crore rupees by agreeing some kind of a haircut. What is this haircut is all about? Haircut means after just talking about Bhushan Steels, if the total exposure is for 40,000 crore or 42,000 crore, the banks will say, okay, fine, let's go for a compromise. Let this 4,000 or 5,000 crores be compromised, and balance 36,000 may be realized. Like that, they will move ahead. Okay, as far as IBC is concerned, because earlier what happens is that it takes around 4 to 5 years to wind up a particular company. For example, a XYZ company has stopped its functioning. It has to file a case with High Court. The High Court will take 3 to 4 years or 4 to 5 years to complete the process. Now the process has got a fillip. It has to be completed within a span of 270 days. With the help of insolvency professional, the National Company Law Tribunal, etc. Okay, so that is the third important aspect. So these are the main important points of I've just highlighted the 3 important points. You can find in the PPT the other points as well. And of course, the willful defaulter tag, the non-cooperative customer tag, these are all the other initiatives taken by RBI in this front. Okay, so let us see the conclusion part, that is the suggestions and way forward, what should be done in the future and all. So let us see what happens. Okay, first and foremost is that the willful defaulter tag needs to be given much more a statutory power. That is, the IPC, the Indian Penal Code, has to be amended so that the willful defaulter should be treated at par with that of a criminal offense. Okay, that is the first and foremost thing which we have to do. Coming to the second one is with respect to the recapitalization of banks, especially the public sector banks. As you know, the owner of the public sector banks is the government. That is the government stake in PSBS is more than 51%. Okay, so recapitalization has to be done without any further delay. So if we do recapitalization, capital buffer will be increased, so the banks can lend more to the economic or to the needy. Okay, that is the second aspect. Coming to the third aspect, that is the most important one, merger and consolidation. The merger and consolidation means, for example, we have the example of State Bank of India merging with its subsidiaries, the 5 subsidiaries of State Bank of India, which happened in 2017 April 1st. Okay, likewise, or the other public sector banks like Punjab National Bank, Canara Bank, or the Bank of Baroda, etc. sorry, has to be consolidated. Mergers has to be taken place, and even privatization has to be put in place for weaker banks. For example, government is considering privatizing the IDBI Bank, like what has happened for ICICI Bank way back in 1990s or even 1980s. Okay, that is the second important aspect. Okay, then the fourth important aspect which I would like to say is with respect to the legal system. I've mentioned around 10 lakh crore worth accounts are lying with DRTs. So the DRTs itself is actually covered with so much of cases. So opening up of more and more DRTs, okay, appointing more and more agents or even judges, resolution agents or judges in DRTs can expedite the process. Okay, that is the other important aspect. And the final aspect which I would like to say is with respect to the formation of a bad bank. The Economic Survey 2016-17 has recommended for initialization of a bad bank in the country, that is PARA. PARA means Public Asset Reconstruction Company. That has to be put in place. The bad bank is nothing but the bad bank will absorb the NPAs from the banks, and they will find a resolution on the subject. Okay, so these are all the things which the government can actually do to curb the NPA menace in the country. Okay, so I'm just winding up this particular session, and I'll be coming up with more and more topics. Do stay tuned to our channel, subscribe it, share it. Please share your thoughts also. Thank you everybody.